Making tax digital for income tax. Not something we asked for, not something we particularly wanted either, but here we are. HMRC has decided that self-employed people and landlords need to report their income quarterly in real time, as opposed to one tax return due by 31 January each year, as it's always been. Because, why make things simple when you can make them more complicated? But whether we like it or not, this is happening. So in this video, I'll walk you through exactly what's changing, when it applies, and how we as tax advisors can take the hassle off your plate. So, what is making tax digital? Essentially, HMRC wants business owners and landlords to keep digital records, submit quarterly updates, because once a year wasn't enough, and to do a final declaration at the end of the year. Basically the same as a tax return you're doing right now, but with a few more steps. Now the good news, if you can call it that, is that this doesn't change when you pay your tax. Your usual 31 January and 31 July deadlines will stay the same. But let's be real, this is extra admin. Extra admin, extra costs, and extra stress for many people. And this is where we come in. We can manage the entire process for you, so you don't have to waste time battling HMRC's new digital tax regime. So who has to deal with this? It's not everyone, at least not yet. HMRC is rolling this out in phases, starting with the higher earners. And here's a timeline. So, from April 2026, self-employed individuals and landlords earning over £50,000 in turnover, and that's the combined turnover. So say you have a rental property that gets rent of £12,000 a year, and a sole trade business earning £40,000 a year, your total MTD turnover is £52,000 a year, and you fall within MTD for income tax. So if that's you, then you have to start submitting quarterly returns from April 2026. From April 2027, that threshold is reduced to £30,000, and HMRC have announced that at a future date, which is TBC, those earning £20,000 will have to start submitting quarterly returns as well. So for the time being, if you earn below £20,000, you're safe. Partnerships are not included yet, but HMRC will probably get to them soon enough. And remember, this is to do with your personal income. So if you have a company and you're doing all your business through the company, then this doesn't apply to you. If you're unsure whether this applies, get in touch and we can help assess your situation. If you're VAT registered, you'll have a sense of how this works. But there's a key difference. For VAT, you just report your sales and purchases, whereas within MTD for income tax, it's all your business income and expenses, every transaction. So to compare, both require digital records, both require quarterly submissions, but income tax still follows the normal payment deadlines. So in short, more reporting, more software, and more hassle. HMRC have reportedly said that they're going to release some kind of software to help. But knowing HMRC, I don't expect this to be that helpful. Our advice would be to use an existing bookkeeping software that's already MTD compatible. Now I know what you're thinking. Now I have to pay for software to do quarterly tax returns that I don't want to do in the first place. Unfortunately, yes. But the upside is that good software can actually help. With the right setup, you can keep your records digital and organized, submit quarterly updates automatically, and stay compliant without the stress. Now, MTD for income tax is starting on the 6th of April 2026 onwards, and a return will be due every quarter. Submission dates will be similar to how MTD for VAT works, with the return due on the 7th, 1 month after the quarter has ended. Then, by the 31 January after the tax year, you'll have to do a final declaration, basically a normal tax return with the same deadline you're currently used to. So the first year that MTD is live, the dates are going to be as follows. Quarter 1 is from the 6th of April 2026 to the 5th of July 2026, and the return is due on the 7th of August. Quarter 2 is from the 6th of July 2026 to the 5th of October 2026, and the return is due 7th of November. Quarter 3 is from the 6th of October 2026 to the 5th of January 2027, with the return due by 7th of January 2027. And quarter 4 is from the 6th of January 2027 to the 5th of April 2027, and the return is due by the 7th of May 2027. And then a final declaration is due by 31 January 2028. Oh, if you think that sounds like a lot of hassle, you're right. It is. And that's why engaging a good accountant and using good software is crucial. With so many reporting dates, you don't want to leave anything to chance. Let us take care of it for you so you don't have to worry. So to recap, if you earn over £50,000 from a sole trade business or rental income, or combined, MTD applies from April 2026. That threshold is getting reduced to £30,000 from April 2027. You'll need digital records and software, like it or not. Reporting is now quarterly, even though payment dates stay the same. And this will be some extra work, but we can handle it for you. Now look, do we think this is a great move by HMRC? No. Do I think it adds unnecessary complexity? Absolutely. But it's happening, and unfortunately, we have to deal with it. The best thing you can do is to get ahead of it. Let us take the compliance burden so you don't have to. Now, MTD is going to take some getting used to, both for us as tax advisors and for you. So while MTD is being introduced from April 2026, I'm recommending that some clients enter the voluntary scheme and start reporting through MTD from April 2025, just so we can get used to the system, not have to worry about any penalties or late filings when the system goes live in 2026. So, what are my 3 top tips to get ready for MTD? Number 1, it's speak to a tax advisor now and see if you will fall within MTD and whether joining the pilot program makes sense for your circumstances. Number 2, it's using HMRC compatible software, for example, Xero. As a Xero partner, we have access to preferential rates and lower cost options that we can pass on to you. And finally, my 3rd tip, and the most important one, is get your bank account structuring right. Many landlords and sole traders have one bank account that they use for personal and business expenses. My biggest tip is to get a separate bank account for your personal spending and a separate bank account for your business, and ensure that all business income and expenses go through that account only. That will help to reduce the complexity of the quarterly reporting and ensure you remain compliant. Thanks for watching. If you have any questions or if you're interested in joining the pilot program, just let me or anyone else in our team know.